and hand you over to Mr. Williams. Tom's here, of course. Mr. Williams. Rita's here. Dallas is here. And myself, Peter. So I'll hand you over now to Tom.
Thanks for that, Peter. Yeah, hi everybody. Tom Williams here, speaking to you from Worthing, nice little resort town in the south coast of England, as you probably all know by now. Right, okay, now, first of all, we naturally like to see what the daily chart's doing. And this is a daily chart of the S&P 500 cash market. And I emphasize cash market here. And I've just got 10 bars up because I can see 10 bars easily. Right, now the first thing we can see, 3 days ago we had what definitely looked like, well, it was a shakeout look. Right? When? Was that Monday? Yeah, because this chart being is not updated today, it was updated to last night. So we would expect higher prices with a shakeout like this. Okay? Oh, sorry, the phone's gone. Everything stopped. We do have a sign of weakness back here, look, with an automatic signal on it. Weakness has appeared, which it certainly had. That would be no demand there, look. It's an up bar, look. Note the lowish volume. Note it's closed in the middle. That's why, so that gave them opportunity to have a shakeout. That was Monday. I always said to you, look out for the action on Monday. You would, when you see that, expect high prices, look. They've rammed it down, put the fear of God in as many people as possible. If they're the wrong side of the market, catch stops, etc. Right, but to close up in the middle on a slight increase in volume, that is a shakeout. That's not stopping volume, that is a shakeout. Stopping volume is when you see more substantial down moves. You need to see at least 2, 3 or 4 of these red bars. Then you see stopping volume. But this is actually a shakeout and a bullish sign. Right, on that up it goes. Now Friday's important. Now what have I always said? Friday, okay, it's a down bar look. And this to me looks like a classic sign of strength. It's like a test. Now if we look down the bottom here, when the cursor's on it, it tells us the bar is down, volume is average, but this is the key to it. Spread is narrow. Sorry, it's updating live here. Spread is narrow and it's closed in the middle. That is a sign of strength. Now the only fly in the ointment there is I'm not very keen on these down bars to test like this with what we call a top tail look. In other words, the high is higher than the close of the previous bar. That's normally a bit of weakness in there as well. So what, according to this daily chart, today, Friday, we'd expect higher prices on the back of that. Now, before we move on to the intraday charts, and we can see the trend lines up here, look. So it's a high probability that might go up to that trend line. Now, this is a daily chart of the S&P 500 cash market. Now, before we move on to the intraday charts, any questions about this particular chart? A sign of weakness, shakeout look Monday. I've always said to you, Monday is a very important day because they come back from their weekend. Usually they've sold everything, so they're not trapped in something over the weekend, and that's a sign of strength. But this Friday, or yesterday, Thursday, sorry, it's also a sign of strength. Are there any questions? Right, okay, put, say, a 20-minute or something up, Peter, please. Now you can see it's been whipsawing something terrible here, look. It's virtually very almost impossible to trade, look. Right, I mean here we've got an up thrust, look. Up thrust, which is normally a serious sign of weakness. Well, it is weakness. Right. Then suddenly they turn it around. You've got a blue up bar, look. But note the volume is unusually high. Markets don't like this high volume in these up bars. Right, and another blue bar, that's also very high volume, look. Markets don't like high volume in these up bars. And it's closed well off the high, look. So then they have to attempt to shake the market out. No professionals are in control of this market, look. It's been whipsawed around. Nobody really can get their grip onto it. But they've had a shakeout here. We note that the volume is very high and it's closed almost, look, in the middle, almost. So there must have been some buying there. We do have a signal up here. Potential climactic action. Well, yes, there's some buying there. And lo and behold, we come along here and that looks like a test, look. It is a test. It's a test of this high volume here, which is kind of interesting. We should, on the back of that, get higher prices. That would be a test. Now the computer says, yes, you're right, it is a test. Up it goes. Now these down bars are important because when you get a strong market, or potentially strong, right, the classic red down bar, here look, down bar, volume is low. Sorry, it's updating. Down bar, volume low, spread narrow, look. And even closed in the middle. So that's all the classic signs right there of a test. Here. And the computer spelled it out for you. If you look down here, it tells you it's a down bar, tells you it's a narrow spread, tells you it's closed in the middle, and it tells you the volume is low. You would, on the back of that, expect higher prices. Now that's a 20-minute chart. Any questions? Yes. Right, Rita?
Yes, Edmund is saying, why is the price move so timid at the back of this shakeout and test?
Why is what?
Price move so timid.
Timid?
Yeah.
Why is it timid, is it?
On the back of the test, the shakeout.
Why is the price so timid?
On the back of the test and the shakeout.
What, the daily chart?
No, this one, it's got a shakeout and test.
Here?
Yeah.
Well, I don't call it timid. This is natural behavior. Not really timid, is it? I mean, don't forget, there's a hell of a lot of traders here, professional traders, and they've got a lot of money in there. So on the back of that, they've got to tread carefully. I mean, that there, that black bar, look, to me, looks like an obvious test. Excuse me. It is a test. And that's why you'd expect to get higher prices and on that bar, look. But all this in the background, nobody's really in control, look. Any other questions?
Steve is saying, why wouldn't that red bar be a no supply? So that last red bar, why would that be a no supply?
It was a damn bar, wasn't it? No supply appears on up bars.
No supply.
No supply. Yeah, no demand appears on up bar. No supply appears on a down bar.
So he's saying, why wouldn't that be a no supply?
What, that red bar
Yeah.
was a down bar? It is. That is no supply.
It is, yes. What do we, actually, instead of a test, so it could be a test.
Well, a test is no supply.
Right.
It's just what terminology you use. When you see those red down bars, and they fulfill the parameters that we just spelt out, which the computer tells you at the bottom what it is. If you see a down bar, in other words, a red down bar, and you see the spread is narrow, and you see the volume is low, and especially there it's closed in the middle, that's a sign of strength. You see that all the time, because the markets move on supply and demand. When you see those red down bars like that, there is no supply. There's nobody seriously interested in selling. Professionals are certainly not interested in selling that.
Okay, Colin is asking, sometimes in the past you have described some signs of weakness as not serious, i.e. some instances of no demand. How does one differentiate between signs of weakness that are not serious versus those that are serious?
What was the question again?
How do you differentiate between signs of weakness that are not serious and those that are?
Well, that only comes with experience. I mean, when you go out, right, and it's raining, is it serious rain? You're going to get wet, right? Or you're going to get sopping wet, or you're going to just get slightly damp? The only way that you can tell is by your experience of life. We don't follow mathematical formulas. There are no formulas that will tell you that, answer that question. What was it you said? Some.
How would you differentiate between one that was serious and one that's not serious?
What, down bar?
A sign of weakness, for example.
Oh, it's an up bar. Well, how I would define that was a sign of weakness, right, is usually an up thrust type bar or no demand up bar after a few bars before you've got some weakness there. Then that defines whether it's serious or not. But if there's a shakeout in the background and lots of red bars testing and one thing and another, and you get a bit no demand, that's not serious, is it? May come off one bar or even two, but it's not going to affect the market too much. But if you see that and there's weakness in the background, then that's a different story. Because professional money are fully aware of that weakness in the background, fully aware of it. and that's what they're responding to.
Edmund is saying price seems to stall at 1880, which is kind of where we are, Tom. 50% tracement point of the range between 1886 and 1874. Volume is decreasing at price moves up after the test, after shakeout. So that's, yeah.
Well, we don't follow any formula, so we can't say, look, this is the reason why. The only formula we follow or have looked at is the retracement, 50% retracement, which seems to work. If something seems to work, then we follow it. Something like the trend lines, I suppose they're a formula, but we use them because we know they work. But when you see these down bars, on my chart, I've got them in red. They're down on a narrow spread, close in the middle, and volume is less than the previous two. That is a sign of strength. That means professional money have tested the market, and now they want to go up. That's all I can say to that. But there's whipsawing away, look in the background here. So nobody really in charge yet.
So Eleni says, tell them to look left. It may disclose stalling. The stalling of the price sort of slowing down in its upward move. So I think some of our members are looking at this here. They think, some of them think it's not going to, maybe the move's not going to last very long, but we'll wait and see. Should we turn to the, Peter's saying look at the hour. Let's have a look at the hour.
10 minutes left of the hour.
10 minutes left of this bar, Tom. Gosh, talk about whipsawing. Yeah.
So depending on what the last bar does, it might be a form of no supply.
Yeah, Tom.
Well, this is, it shows you now a chart that was really whipsawed. I mean, you couldn't really trade that. Well, if you did, you'd be whipsawed around. But this last bar, look, that's a test, look. At the moment, we won't know for sure for 10 minutes because wait till the bar's finished. But this is an hour chart, look. And there's a classic down bar, look. All right. The spread is narrow compared to the previous bars. And look at that low volume. It's closing in the middle at the moment. That says, hey, folks, I'm strong now. I want to go up. That's what that's telling you. I mean, this whipsawing around, don't forget that daily chart that we looked at to start with indicates it wants to go up because there was no supply or in the market yesterday. The only fly in the ointment yesterday was the bar had a top tail, which I don't like. In other words, the top tail is a part of the bar that is higher than the close of the previous bar. That normally spells it's something they've been gone up there on no demand or something wrong. So it's not 100% accurate yesterday, the information. But this looks like a test, look. If you look at this closely, look. At the moment. But we always recommend you wait till the bar finishes because that can suddenly close at the bottom and it's no longer a test. In other words, don't count your chickens before they hatch, as the saying goes. But if that finishes up like a test, that market should go up. But that whipsawing is horrendous there. Even those top professionals will have a job to live through that. Definitely. I believe, was there some news or something?
Well, at 1:30, which is now before the market opened, must have been some news because the market rose up in a flash, then collapsed again.
That was the up thrust. It was news, apparently, according to Peter. Unemployment. Now, what a bit of unemployment's got to do with the market whipsawing around? I'd be pleased to somebody tell me. So it just shows you they use the news, as an excuse to whipsaw the market around. So in actual fact, it's got nothing to do with it.
Okay, we're going to move on. Pete had his question in straight away at the beginning of the webinar. He wants us to look at Boeing. BA. Boeing. Go to the end of day.
It's on end of day, isn't it? Right, Peter's just trying to find it. Boeing. That's the S&P. Is that it? Boeing. Well. Okay, well, I can immediately see, obvious to everybody, a sign of weakness right there, look. You've had an up move, so you're vulnerable, right, to professional money taking profits. Here we have an up bar, top it out. It's closed off the high. Look at that high volume.
Supply.
What's it say?
Supply coming in.
Supply coming in, which is dead right. That is 100% correct. Supply will knock that down. Don't forget it moves in harmony with the index, the parent index. And that was the shakeout that we saw on the index. On the back of that, it's trying to go up. But this is a sign of weakness right here. That is not going to go away. That will influence this market, especially because it's got high volume. However, they do hold the market up. Don't forget, these stocks have a specialist there. He or she is fully aware of the state of supply and demand. What time frame is this?
That's the end of day.
End of day, right. So, right, it's a similar story, look, to the S&P 500. We have a red down bar, very low volume. There's not a lot of selling pressure in that stock at that moment. But we've got this looking down on us in the background. But I was saying that we do have this sign of strength here, which is like a shakeout. You could draw 50% tracement between the low and the high. Can you do that, Peter?
Yeah.
Peter's going to draw a 50% retracement. Now this is the, right, 50%. That line.
Yeah.
Well, there was some support on there, look, obviously. However, you'd be looking for some sort of support on these 50% retracements. And we do have an automatic signal That's why it went up there for 2 or 3 days. But this here looks as if it still wants to go up for a bar or so. But you've got this in the background, which will put any dampening down any sort of bullish activity. On saying that, it may quite easily go up to that level.
Pete is saying today is up so far.
Yes, it would be, because of that test, look. Yes, but if it goes up here, and you see another up thrust, that's an up thrust type bar, or no demand, or up on a narrow spread, high volume, that are going to come off. But right now, it looks as if it's trying to go up there. Okay.
Okay, Eleni would like us to look at lumber.
She looked at lumber before, didn't she?
Yeah.
Continuous contracts.
Yes.
Lumber. Fantastic word, isn't it? Lumber. We just say wood. Wood. But their terminology is far more accurate in America than here. Is that lumber?
Yes.
Well, again, the market's testing, but you've got weakness there, look. No demand, weakness, and of course you've got this reversal here. And that gap down like that's usually not healthy. But on the back of that, what looks like a shakeout, you're probably going to get 1 or 2 up bars following this. Peter, you could draw a trend line between there and there, and another one going up like into an arrowhead. Yeah. And then low. So I like to draw trend lines on my charts. That's it. So you can see it squeezing into this arrowhead, which normally means they want to, it'll move out of there rapidly sooner or later. Because the more it squeezes into an arrowhead, supply and demand are becoming more and more equal every day. Markets don't like that, and they will explode out of these arrowheads, usually, or expected to. But to me, that looks as if it could easily go up 1 or 2 bars. But we'd have to wait to see what happens to give any further analysis on that. But there is a lot of weakness there.
Okay, so if anybody else has got any charts they want us to look at, please put them into the question box. Let's see if this is working now. Hang on. No. We've got technical problems with the real-time charts, so we'll just, it seems to have sort of seized up. We're just redoing it. Oh, there's quite a few have come up now, Peter. Gold, crude oil, a few more. So we'll just wait for this to come up and then... Can we go to gold for Ming?
Daily chart of gold. Could you draw a trend line on there, Peter? First two highs and the first low. That's a traditional Wyckoff way of drawing trend lines. Yeah, on the up bar, black up bar. And that one, that's it. And yeah, that's it. Now that's gold, look. Well, you see this lower trend line? Could draw on that one if you can. But with these trend lines, some of them you'll get the feel of where they should be. First two highs, first low of the markets, that's it. That's it. That looks better. Now we notice there's the trend line. We can see they do work. It's hit this top trend line now, and we note there's no demand. In other words, low volume. There's some supply on that up bar, look, followed by no demand. That's why it's drifting off, look. And that could easily have lower prices. What?
If you're talking about this chart, Leslie is talking, I think, yeah, talking about this chart, says that today the high is above that trend line. It's on 1305, which is up here, Tom. The high is up here. Yep, and the low 1298. Oh, so if we're talking, are we talking about this chart, Leslie? Testing 1298 now. Yeah, so it gapped up then. It must have gapped up. The low was here. The high is up here. So the low kind of started here, Tom. Yeah, where the arrow is, and the high is up here. Yeah, if I'm correct. Sorry, not the low at 1298. Testing at 1298. He's saying. Right. Testing at 1. Sorry, we just don't have the intraday data for it, so it's very difficult to picture it. But have you got any more to say on that, Tom?
Well, you know, they do mark gold up and down. I'm not clever enough to be able to analyze a chart on the individual information that's come in from some other source. I like to see it. I'm a visual person. I like to see it on the chart. And I've learned from experience that when I look at these charts, I often see things other people haven't noticed. And therefore, what they tell me could be very easily mislead me. But if that's gapped up, no, I'd have to. I'm surprised if it's a bullish move. I'll be quite honest. There is supply on that bar, look. Here. Gone up and no demand there. and admittedly it's falling on no supply. There's actually a yellow box here.
Do you want me to click on it?
Well, I know what it's telling you. What's it saying? Test.
Would have been a basic test.
Yeah, the reason why an arrow hasn't showed up because the next bar's down. And for safety reasons, we've instructed the program not to come up with an arrow unless we see a test, but next bar is at least level or up. Because these markets are so dangerous, you have to be kind of super careful and concentration. Anything else, Rita?
Yeah, crude oil. So I'm going to go over to crude oil for John. Well, let's put up more bars just for the bigger picture, Tom. So that's the bigger picture. From there to there. That blue one there, or the first.
There we are, this is crude oil. Now Rita's just drawn a trend line on there. And we do have, that's an up thrust, look. We've got no demand here, look. Up thrust, so this is a weak market at the moment. So don't be surprised if this doesn't go down to that lower trend line. That's all I can say about that.
Eleni suggesting I put centre line on there, you know, on the trend channel.
A what?
The mid lines, you know.
We do have various lines we can put up there, don't we? I can't. Oh, this spotted thing. Yeah, but you've got weakness here, you see. And that down bar's weakness. We got weakness at the top here, but these widespread down bars, look, as they push down through an area of support to the left, close on the low on increase in volume is bearish. Keep that in mind. Followed by an up thrust, look, another down bar, look, another up thrust, a gap down bar, probably pushing down through this middle line. This would easily go down to that lower trend line we drew. We haven't seen any stopping volume or any reason why we could say they're suddenly going to, these stocks won't suddenly turn around. They have to have what we call a cause. And of course a cause is professional money stepping and buying. And we can't really see that at the moment.
Right. Soybeans for Tina. I'm just putting up the bigger chart there. So put 20 bars up, Tom. That's soybeans.
Well, another commodity. I must say I'm no expert in following soybeans, but when you look at the chart, look, this looks like an attempted shakeout on the low part. Widespread up. The volume is quite high, followed by no an up bar. Narrow. Look how the narrow spread is. But look at that lowish volume. That's why it's come off. To me, this chart is unclear. You do nothing unless you can see a clear principle that you fully understand and more or less know what's going on. You could draw a trend line between the two highs, Rita, and here. That's it. And here. That's it. Now there's the trend channel, look, and it tells us it's slowly drifting down slightly, but going sideways as it whipsaws. You would expect some temporary support on these trend lines. There's nothing really obvious to me to say that's definitely doing this or that. All I can say is it's vulnerable now to one or two up bars appearing. It seems to be drifting sideways within those trend lines. That's all I can say at the moment. What's that, Rita?
Louis would like us to look at the pound-dollar pair, the 1 hour and the daily. So this is the daily chart first of all, and then when you're finished we'll go to the 1 hour.
Right, this is this. No, I want less bars. Yeah. Daily chart, right? Well, there's been a little bit of a shakeout there, look. And on the back of that, up, this looks like a bit of a test. It's running into supply all the time. We've suddenly got some volume here, look. Up bar, narrow spread, that's why it's come off on that bar. This is making heavy going on the upside. But there's nothing obvious on that daily chart to me. But it's making heavy progress on the upside. Put an hour chart up, Rita, please. Yes, that's why, you see. This is an hour chart. We've got some weakness here. Now we've got something we can get our teeth into, look. There's an automatic signal. Supply, fair enough. Down it comes. This is a shakeout. There'd be no demand. Because the market was making heavy progress on the upside, seen on a daily chart, they have these shakeouts. This is a shakeout.
It says potential stopping volume.
Right. It says stopping volume. Same thing. It's a down bar look. Volume is very heavy. Closing in the middle. That is a sign of strength for the hour chart. That means professional money must have stepped in there and are buying. Followed by an immediate test look, a down bar. There's no selling pressure look, low volume. On the back of that, up it goes. So this looks as if it wants to go up at the moment. But we talk about scalping, remember. We're not talking about analysis over a long period of time. But there's so many different ways to trade these markets. See, if you were trading options, perhaps, the way we describe the market on these fairly short time frames would be ideal. You could buy or sell an option on the back of these signals or the information got from the chart. And I know we have quite a few people that do that. And those people that do trade options, the ones that seem to make money are the ones that aren't in there very long. 4 or 5 days at the most, and they're out. Don't forget, options are written from professional trading houses that know what they're doing. So you have to be very careful. In a way, it's almost to con some of these options because they say, oh, you've got 9 months to run. So if you've already made a couple of £100 or dollars, you think, oh, I've got 9 months. Perhaps I'm going to make a lot more. But you'll find that that longer time period runs heavily against you. It seems to work that way. You're up against professional trading houses that know what they're doing with options. But we do have several successful option traders using VSA. And I must say that they're only in there for a short period of time.
Okay, James wants us to look at WPRT. Right, so it's had a... yeah, what is WPRT, James? Yep, so there we go. That's a bigger picture, and that's 20 bars, Tom. So James, Eleni, are you saying Twitter and then withdrawn? What does that mean? James is saying WPRT. Oh, right. James is saying WPRT is showing bottom for a major up move. What do you think, Tom?
Well, you may very well be right, because right here we've got what looks like a bit of stopping volume.
So it's up 2.85 today.
Yes, look.
Strength coming in.
Right. up it goes. Now we're looking, we know that when we see the stopping volume like this, we know that what we're looking for is a test. A down bar, in other words, back into this area, and the volume is definitely low. So down it goes, and there's that test bar. Look, looks like a test to me.
About 2 bars further on.
Yeah, that looks like a test as well. But this one, look now.
Apparently today it's up.
Yes, it would be. Is this a daily chart then?
Yeah, James is saying the current price is 15.77. Which, Tom?
Yeah.
15.77 is up here.
Well, we've got something wrong. If we look at the right chart.
Peter's just looking it up. It's Westport Trading.
Yeah, it's gone up.
Yeah, it's shot up, Tom. It's really shot up. Yeah.
Well, the reason it's shot up is there's a test, look. I'll draw a line back on there, look. Right, back down into the area where we saw the stopping volume and this automatic signal, and the volume is now low. That's why it's shot up like that, here. And there's another test there, look. That's a test as well. And that will be, this is a classic sign of strength, look. And the computer will tell you, look, down bar, yes. Volume low, yes. Sorry, it's updating here. Volume low, spread narrow. Don't forget, it's volume spread analysis. So the volume is low, so no selling. Spread narrow shows there's no selling pressure. It's even closed in the middle, close high. That's why it's gone up today.
Okay, Pete wants us to look at BSX. BSX.
Right, okay. Well, okay. So that was our shakeout we saw on the general index, parent index. On the back of that, up it goes. But it's now running into supply, look, or no demand. When you see this goes up, especially when you've got these red arrows appearing, and it starts to round over, and these blue up bars appear on low volume. That's weakness, distribution. So they marked it down again, widespread down on a very heavy volume, look. The spread has got narrow. There was some buying on their support because you've got a red down bar, look, narrow spread. Volume is substantially high. So there was some buying on these two bars here. So you expect some sort of up move on this particular stock.
Okay, so we'll look at one more chart. We look at the Aussie dollar daily. for Colin. Right, let's put that up. Hang on. Right, so this is the Aussie dollar daily that's been doing that, Tom. Yeah. And Colin, just read out what Colin says. It seems to have broken down out of its long-term trend channel starting from the 31st of January. So, shall I show you where 31st of January is, Tom? Oh. There you go.
Well, I'm looking at
Yeah. Do you want to?
Short-term movement. We had some fairly obvious signs of weakness here. Look at the top. Right, no signal on it. But it should be weakness to you. When you see these blue up bars, if they're on low volume, that's a sign of weakness. Now it's come down reasonably substantial. This looks like support coming in at the moment, look. So that now begins to look more bullish. We've had a fairly substantial down move, which makes it vulnerable to one or more professional groups looking at that and thinking, right, I think we can make some money out of that. And usually, right, they move into the market, you see the increase in volume, closing near the high, and this is almost like a springboard or come shakeout. I'd rather be long on that than short at the moment. But don't forget, these are short-term views. For a longer-term view, you need to look at daily or weekly charts. Yes.
We'll go back to our, just for one last look before we go at the, sorry, I'll get it in a minute. So there's a 20-minute chart of the ES there, Tom.
Right, so it's still reeling from all this whipsawing in the background and weakness. Weakness, 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 no demand, look. It's Friday, and it's also a Friday before a holiday, and they usually love to try to mislead you, or mislead the papers, mislead the magazines, mislead the TV, stock market reviews. So you get as many trades as possible wrong-footed for when they open up next Tuesday. But there looks like a hell of a lot of weakness here. There, and this, it looks like no demand up here. You'd have to watch this carefully. Yes, it looks like a bit of strength on that bar because it's gone down to the reasonably fresh low ground and there's no selling pressure at the moment. So that right at the moment looks stronger than it does weaker.
Okay, that's it for this week. Colin, regarding the recordings, we'll try and sort that out as soon as possible for you. So that's it for today, and we'll be back next week, next Friday. We're going to do the webinar, the newsletter this week, Sunday, I think. So that's it for tonight. Thank you for coming, and we'll see you next week. Bye-bye.